Welcome to today's video. In today's video, I want to talk on the Euro USD pair, the possible move for the Euro USD pair for the week starting November 13, 2023. Then, before I commence, I have this custom of always going to DXY charts, the dollar index chart, to ascertain where the direction of the market, the direction of the market on the dollar index time frame charts. And then why do I always do this? This is because whenever the DXY is bullish or bearish, Euro USD, GBP any pair that has USD as its base currency would be bearish. That is, if dollar index is bullish for the main time, Euro USD and other USD pairs will be bearish. And if it is vice versa, whereby the dollar index is bearish, expect Euro USD, GBP and the rest pairs, US dollar pairs that has USD as their second currency to be what? To be bullish. So before I start my analysis, I drop to the dollar index time frame chart to check the direction of the dollar index. Yeah, the DXY. So on that chart, on the weekly chart, take note it's on the higher time frame that you get the direction, the overall trend of the market. You can find out that from this, if you shrink more, see that the price is on a bullish run on the DXY. Yes, a very sweet bullish run on the DXY. And then later again, at this point, okay, yeah, at this point, from this level to this level, you still see that bullish structure in it. That's also continued that bullish structure. So what is this telling me now? It's telling me that since the dollar index chart is showing a bullish character or bullish structure, that means on any pair that has the US dollar as its second currency or goods currency should be bearish. So we've gotten our direction from the DXY. So let us go down to the Euro USD pair. Yeah, to the Euro USD. Maybe it's Euro USD. Yeah. So what are we seeing on the Euro USD pair? Now that if we shrink our charts, we see what we are seeing. That dollar index is telling us that giving us a bullish character, while this pair Euro USD is giving us a bearish character, and you can see it from this level right here, from this top to this bottom, right? From this top to this bottom, and also from this level to this level, price has been bearish. So we're seeing that maybe for this week, price might continue that bearish character to the downside. So what other confluences do we have regarding this? Please, let's drop down to the daily chart. So what is the daily chart telling us? Now, if you can see on the daily chart, we have some trend lines. Yeah, we have trend lines on the daily charts. And what is the daily chart telling us? Yeah, judging from what has happened from this high, from this particular high, from this high at 1.12370, 1.2739 down to this level. From this level, I'm coming a bit, from this level to this level, price has been bearish. But then we notice some correction. Yeah, we notice some correction. Yeah, market will always either sell or buy, then correct itself. If there is a long bearish momentum, price will also seek to correct itself just the same way. Yeah, you cannot just be buying and buying or selling and selling. You need to correct yourself. Take for instance someone that has a shop selling some goods and merchandise. You cannot just be selling, selling, selling. Yeah, you need to also what buy to restock your store. If you don't buy to restock your store, it will get to a point where you will not have any merchandise or any product to sell. And that is just the simple definition of that. So you don't just want to be selling or you don't just want to be buying. You want at a time to what? Either you are selling, at a point you want to buy to restock your shop. And that is what is happening now on this pair. You see, from this point to this point, price has been stuck, has been going down. But then from this point, from this level to this level, price is what is going up. So that is showing you that price would be correcting itself, or price is correcting itself after that long bearish move. Now that is it on that. So what other confluences are we seeing? We can see some trend line. Yeah, trend line from this level to this level that made us to know that this market is correcting itself on the daily charts. The daily chart is showing us correction on the Euro USD pair. Now, what other confluences do we have? We see that price moved up, moved from this level to this level, made a new high, made a new low, a new high, a new low, a new high, a new low, and now made another new high this point and is also trying to make another new low at this point. So on the daily chart, we are still expecting price to continue that low, yeah, to still go down to form another new low. This is not a trend change. The Euro USD time frame, the Euro USD chart is on a bearish move, as the DXY told us or has shown us it is on a bullish move. So the opposite is what we are seeing now on the Euro USD pair. So let's drop down to the 4 hours. Let's see what the 4 hours is saying. Yeah, this is becoming more and more interesting. Then you can actually see what we've been seeing from the daily chart. Now from the daily chart you can see the trend line, yeah, from this level up to this level, yeah, and also this level down to this level. It's making series of higher highs and higher lows, higher highs and higher lows. And now something interesting has happened. Yeah, we've gotten to a high, yeah, to a high, and now price is dropping. So what is this telling us? This is telling us that price is will definitely continue to drop, for this week and subsequent weeks. But since we're seeing price will drop, yeah, price will sell. And what we're seeing is that price will drop. That is sell. Yes. Do you want to just be shorting? Yeah. Do you just want to be shorting the pair? It's not possible. There are times the buyers will come in and take control, but that doesn't mean that we are the trend has changed. This is just telling us correction. Yes, as we are selling, we need to be correcting. As we are selling, we need to buy as well. As we are selling, we need to buy at some point so that the market will be balanced. So if you don't sell, if you are selling and we don't buy, the market will never be balanced. And that is just a simple rule of the forex market. So from this chart, we can see that price is beginning to drop from this level, yeah, from that high there to this low, and we still expect price to drop down to this level, at least to 1.05655. Price should get there pretty soon. Now, if not this week, maybe next week and the upper week that's coming. Take note, we are not saying word for word what will happen in the market. We're just trying to analyze this pair to see the possible moves of this pair. So let's go down to the 1 hour time frame. The 1 hour time frame. Yeah, on the 1 hour time frame, you see something very, very interesting. Yeah, why do we say this is very, very interesting? So we find out that the price at some point at this level, this top price touched that trend line on above there, and then it didn't break, to show you that okay, we want to start the bearish move after this bullish run from this level. Yeah, from this level to this level. So now price is now bearish. And when price started that bearish character, we had a high at this point. Now price came down to make a low at this point. Yeah, price came down to make a low at that point, and also make another high at this point. So now what are we seeing? We are seeing liquidity. And what is liquidity? Liquidity, the forex market is always liquid because money has to come in and money has to circulate. That is just it. So for price to continue to sell as a new high has created, price needs to create another new high for that downtrend to continue. And that is what we are seeing at this point. This point here is giving us a high. Let's bring it clearer. Let's make it more clearer. Yeah, this high here, this point is a high. Started coming down to this level. Now, for price to continue on the sell move, price needs to make another new high, and that is this high that we're seeing right here. Now, after price has made that high, price needs to take that high out. It's liquidity. Yes, price needs to take that high. Now, the presence of this high at this point makes this high that we have already seen very strong. This is telling us that price will, as long as this bearishness continues, price will never come back to this high. Yeah, that is an evidence that we are going down. So the presence of this high makes the other high very strong. In another video, I'll be talking extensively on this high, on these highs and these fake outs, just like highs and fake outs. So now let's continue. Then for price to continue selling, we want this second high at this point. Let me pick my tool. Sorry about that. So sorry about that. Okay. For price to continue selling or dropping, we want this high, yeah, this high that is formed here to be taken out. Yes, that high should be taken out, and that is what is happening at this point. You can see. I don't know. Let me enlarge this. Okay, let me enlarge this for emphasis sake. Let me enlarge this and talk more on it so that we can get a clearer understanding of what I'm saying. So now, so price has made this high at this point. Now, for this bearish momentum to continue, price needs to make another high, and this is where that high is at this point. Now, the presence of this second high makes the first high very solid. Yeah, the presence of this high makes this other high very solid. And what is this telling us? What is this telling us? This is telling us that as long as this bearishness continues, price will never come down to this, will never go back to this point. Yes, price will never go back to this point. Instead, price will continue to go down, and that is it. Price will never go back to that point. Price will continue to go down. Then, what are we also looking at now? This second high that has been created at this point, price will seek to take out this second high. Then, once price takes out this second high, we continue our bearishness. And how do we know that? And you can see that price came to this point and took out this second high. Now, after price took out that second high, we should look for reasons to go short. In another video, as I've said, I'm going to really explain this. I'll bring out time to explain what I'm saying right here. It's just liquidity. I know the forex market is liquid. Yeah, price will always buy from a liquidity level to another liquidity level. It will also sell from a liquidity level to another liquidity level. So once that second high, that is the second high at this point, this second high has been taken out, yeah, that is from here at this level. Once price has taken now, we want to look for reasons to go short. Now this is where the lower time frame becomes your very good friend. Yeah, the lower. For emphasis sake, I am on the MT5 1 hour time frame so that the whole idea will be clear. For us to get a clearer understanding of what we're saying, I have to come down to the 1 hour chart on the MT5 to really explain what is going on. So I just want us to get a clearer vision. Now, from this point now, we can see that high that we talked about on the trading view, and another high that has formed. We said that the presence of the second high makes this high very solid, and then we said that price will never come back to this high. For if this bearishness will continue, price will never come back to this high. Instead, price will continue to go down. But then for price to continue to go down, price will need to take out this second high that is at this point, this second high. And that is what we are seeing here now. For this bearishness to continue, price will need to take out that high. And that is what has happened now. Price took out this high at this point. And after price has taken this high, I've taken out this high from this point, we look for reasons to go short. Now, this is where the lower time frame comes into play. This is where the lower time frame becomes a very good friend, because you don't just enter like that. You have to go down to the lower time frame. Then, on the lower time frame, you can see that trend line. Yes, at this point, that trend line, yeah, that took out that high. At this point, we can see that trend line that took out that high at that point. Can you see it? Yes, this is it. This is it here. This is it here. From this level that took out that high. Now, since that's taking down that high, we want to look for our own reasons to go short. Yes, very simple reasons to go short. And we have a lot of reasons why we are going short. If you pay close attention on what has happened here, immediately that high was taken out. From this level, price came down and formed another high. So we have double top on our 15 minutes chart. So when we see this kind of thing playing out, we know that yes, we want to start selling. Now, because we've seen a first high, the price pushed and made another high, this is giving us double top and it's a clear confirmation to go short. That is one. We are seeing another thing again, or I'm seeing another thing again here. What am I seeing? Please let me zoom out. Now on the second high, I've seen something that I love seeing. Take note, we saw a chart pattern that is double top, the first one. Now the second one, on that second high, I've seen something I love seeing the most. And what is this? It's a candlestick formation. Now, what is that candlestick formation? This candlestick formation is the bearish inside bar candle. Now the bearish inside bar candle signifies, or what it entails is this. Now we have a bearish candle, and just before that bearish candle there was a bullish candle. Now this bearish candle is in between the high and low of the bullish candle, and that is what you are seeing here. Yes, at that second high, that is what we are seeing. Yes, price the second candle, this second red candle, is in between the high and low of the mother candle and the second candle. I've talked about this on one of my videos. So I love seeing this very much when I come to the lower time frame. I will just try as far as possible to spot out this. When I spot out this kind of things, I know yes, it has given me more reasons to continue short. And can you see we were short down to this level? Yeah, we were short down to this level. This is actually the bearish inside bar candle, if as you can see at this point, and that bearishness continued till we got to this level, continue from this up to this level. Yeah, that was good. That was really nice and very good. But then we were looking for reasons why this market should continue going down. But then price then unexpectedly made, after making this low, price moved up and took up that initial high. Yeah, This is very, very interesting, and this is just the market for you. Market will not just be selling, selling, selling. Even if you are selling, yeah, this is why most people lose their account. Even if you are selling, price will not always do that sell. It tries to correct itself. It tries to correct itself. And don't forget, for liquidity to take place in the market, liquidity takes place from liquidity level to another liquidity level. So this bullish run that you see that took out this other high, this high that has been created at this point, yeah, this this bullish run that took out this high. Now this high that was created out, now if you go to your 1 hour time frame, it's just one, but on the 15 minutes chart is double. Yeah, that took out this high. Now price then run took out this high. Now what is price telling us? That for this bearishness to continue, price needs to take out that high that has created before, so that the bearish market will continue. And that is what you're seeing here. If you can see, the bearishness, when you took it out, the bearishness continued. I actually took this trade. And I got a very nice return from this trade. It was very, very interesting. So that is it. So price will always take out new highs that has been taken. But take note, it will not, as long as the bearishness must continue, price will never, go back to our initial high. Let me take us back to the 1 hour chart. You can see on the 1 hour chart, yeah, this is what we have been seeing all along. Yeah, this is what we have been seeing all along. This is it here. That high was there. Now for the bearishness to continue, this high, another high needs to be formed. Now the presence of this second high makes the first high very stronger. And then for us to continue the downtrend, now this second high needs to be taken out, and that is what we're seeing right here. The second high was taken out, and we see price dropped from this level up to this level. Now when price got to this level, there was small market reaction that took price to the next high. Now price went to the next high and break that high, the new high that was created. Yes, the new high that brought this market down. Price broke it. And now, why is price doing all of this? Price is doing all of this to gather its strength back to continue the sell. And that is the sell that we are seeing right here. So the whole of this move has taken place. It took place last week, and then for possible reactions or for possible move to the next week, we are going to also see that bearishness continue. Then for us to see that bearishness continue, we still want. What are we looking for now? Take note that we have a high here. We also have under high here. Now this is our new high. Now we are taking this as our new high. Yeah, the whole of this has played out. Yeah, the whole of this has played out. So we want to take this as our new high. A new high has been created here, and also we have another new high at this point. So what do we want to see? Just as what has happened at this point, what has happened at this point, we want the same thing to also happen right here. So we have, yeah, so right here we have a high at this point. We also have another high. Now the presence of this high makes this other high very solid. Let me take that again. The presence of this high makes this other high very solid. So we don't want price. So as long as price will continue to go down, price will not get back to this level. Price will only seek to take out the second high before it continues. So the same thing that happens at this point, where price made this high, and we know that this high here made this high very solid. We want price again. We wanted price to take out this high. Yeah, this high, and that is what has happened here. So for this market now to continue dropping, we want price to take out this high that has formed at this level, but price will never get to this level. Price will take it high, but will never get to that level. Go short. Now, since we've seen that price we need to take out this high, actually, since we've seen that price we need to take out this high before it start dropping, we have other reasons why we are going short. Now, in trading, you must have more than two conferences or more than one conference before you take your decision. So we'll be introducing our Fibonacci tool at this point from this high, from that high to this low, actually from this high right here to this low. Now, if you look at the Fibonacci tool, this is something interesting is playing out. Now, price is currently at now is on the 50% level. Now, price is just at the 50% level. And take note, we said that price we need to break out from this high at this point. Price will need to break out at this high at this point. So when price breaks out from this high, price will start dropping. Now, price is at that high now, and that high is on the 50% Fibonacci. Yes, that high is on the 50% Fibonacci. So possibly price might break this high and reject from the 61.8 Fibonacci level. So that is it. So for when price happens, or when this happens in the chart, when this happens in the markets, we look for reasons to go short, just as we've gone short earlier. Now, after that, another reason why we are going short is that we have a psychological level just above the 618 Fibonacci level. Yeah, the psychological level 1.07000. That is a very good level where price should start with reject from. Yeah, if price gets to the 61.8 Fibonacci and rejects, we will also see that rejection on that psychological level. We know that psychological level serves as support and resistance level in the forex market. So we've seen our confluences now. First of all, we've seen the Fibonacci. Price is currently at 50% Fibonacci and might get to the 61.8 Fibonacci level. And also, price might actually get to our psychological level, which is 1.07000. So these are our confirmation. These are the confluences we have now. So if price should get to these levels, we expect price to form a chart pattern, just as we've seen before. Yeah, just as we saw in the 15 minutes chart. That is when we go down to the 15 minutes chart. We go down to the 15 minutes chart to check if these chart patterns has formed. If these chart patterns form or candlesticks reactions, candlesticks chart pattern forms, we'll be taking the market. And once we take that trade, let's go back to the 1 hour. Once we take that trade, our stop loss should just be above this high at this point. Yeah, our stop loss should be around 1.07241. Now our take profit should go down. Now you should be targeting the next psychological level. Yeah, the next psychological level 1.06000. So that is it, and the market will still drop. It's still dropping. So we want to just look for important opportunities or make good use of these opportunities whenever they play out in the market. So this is just my analysis for Euro USD pair. Now, take note that price might not respect my analysis because I don't move the markets. This is just my what I think would happen, and we just hope that it happens, it plays out that way, so that we can get a good percentage. But then if price doesn't play out this way, we should be very, very careful if we are taking the trade, so that we will not get stopped at all. Price eats our stop loss or eats our in money. Yes, from our account, from our trading account. So we need to trade cautiously. We don't move the market. The market has its way of playing out. We're just there to to analyze. Yes, we're there to analyze. And take note, this is as a result of backtesting and backtesting. Price might not actually do this, but when price does this, we want to take advantage and act and react. We wait for the price to act or the market to act, then we react. So I'll be making another video if all of this has played out and showing you how they played out. So just for the meantime, just sit back and take that trade. Yeah, take that to look for reasons to go short on the Euro USD. You can still buy it though, but from now, all we are seeing is just a selling momentum. Yeah, let's just take that sell. Just click that sell button now. Just click that sell button. So thank you for watching the video. This is Sumadna. See you in my next video. Peace out.